What's good? What's good, everybody? Welcome to Sniper Academy. My name is Michael Bass. In today's video, we'll be going over market structure. Market structure is very important in the market because we're basically identifying whether the market is bullish, bearish, or in consolidation. If you're watching this video, you're familiar with Forex, you're familiar with trading, you're familiar with what we do at Winner Circle, how myself, Michael Bass, trades, how I've been teaching for the last couple of years. And we're really here to get that refresher, catch up in the market. Everything that we do is just repetitive and it's consistent. If you watch the video about Truth About Trading, you know exactly what I'm talking about. So you understand that these trainings are just a matter of being consistent and actually putting the work in. I make these videos short and straight to the point so that you can actually apply what's being said and, actually start seeing that progress that you want. So when we're talking about market structure, we're either talking about price being bullish going up or price being bearish going down, or last option is when we're in consolidation and the market is going sideways. These are all things you should know. You should have watched the basics course. You should have watched Sniper Academy 1.0. This is 2.0. This is the advanced, the elite version, right? So like I said, when we're watching this and we're going over market structure, I always talk about it right here that you see. I already have it written down. When you're marking up your charts and you're getting ready to do your homework and do your research and get ready to trade for the week and figure out, what type of trades that you're going to be looking for that week, you can't just start on Tuesday, Wednesday, or Thursday. You have to start your analysis. You have to start your markups on Sundays. On my chart, I already have Sundays marked off so that you can see and you can start identifying market structure. Because when we're talking about market structure, we're talking about three things. These are three things that I want you to write down. We always talk about it. No takers or money makers. Where are you at? Where have you been? And where are you going? That's what market structure is. That's all market structure is where are you at? Where have you been? And now where are you going in the market? Okay. So later on in later videos in the course, when we're talking about buyers versus sellers, you understand just the concept of who's in the market, how the market is going back and forth. It's a very simple concept, but market structure. Okay. So we're going to start on Sundays. We always start on Sunday. So each of these black lines that you see on my screen, are Sunday, the beginning of Sunday. Okay. So make it very simple. When we're start going into the market and we're looking and we start identifying market structure and we start identifying trades, we look at it from that bigger perspective on that 1 hour time frame. We look at market structure on 3 time frames, the 1 hour, the 15 and 5 minute as day traders. We are day traders. 95% of the people watching this video right now are day traders. So I want you to focus on the 1 hour, 15 and 5. It will make your life a lot less simple and a lot less stressful. I promise you. We use the higher time frame for direction and we use the 15 and 5 minute for entry. Everything after that, I want you to sometimes act like nothing else exists sometimes to a degree, okay? Because everything else is we're talking about where the market is at, where we're going, and where have we been. So each week we start identifying where the market has been. If we go at this previous week right here, we start here, we can look at these last 5 days and determine what was the market for these last 5 days here. What did the market do this week? It was bullish. What did the market do the previous week? It was bullish. What did the market do the previous week before that? It was bearish, 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 right? Pretty easy to identify market structure. This last previous week, what did we have? The market was pretty much this can be considered consolidation. The same place that it started is around the same place that it ended. Now we had a lot of movement down and a lot of movement up. These are beautiful type of weeks to trade because as day traders, we can make money when the market's going up and we can make money when the market is going down. So it's just a matter of knowing what trade you should be in for that specific day and sometimes even that specific week. Once you start identifying these things from a bigger perspective, making your trades on a day-to-day basis become a lot easier and you become a lot more confident in your trades. The biggest thing, like I talk about, is that you have to give yourself that 90 day of consistency to actually see your results and actually see, okay, I'm understanding what I'm doing on a day-to-day basis and I'm confident in my trades and I can make the money that I'm here to make, because the truth is everybody is here to make money. Everybody's here to be free. Everybody's here to be financial free, right? And have that luxury to do what you want to do. So when we're looking at the market, that 3 to 5 day look back is very important on your day-to-day based trades, okay? And that 3 to 5 day look back is very important all the time. When we're identifying our trades, when identifying our trades on a day-to-day basis, we're doing that 3 to 5 day look back. So if you're trading on, this is Monday, Tuesday, Wednesday, Thursday, Friday, right? And we're looking to trade and you're trading on that Monday, Tuesday, what are you looking for? You start looking back the past 3 days. You can take any day when you're studying and say, okay, well, I like to trade Tuesdays, Wednesdays, Thursdays. So I've done my homework. I know how the market moves. We look for Wednesday midweek reversals. So if we're trading on Tuesday, I'm going to look back the last 3 days to see the last 3 to 5 days to see where the market has been. 1, 2, 3, 4. And if I zoom out a little bit, we'll be able to see, that kind of messes up the drawing a little bit, but let me see, I got you. This is where we're at right here, okay? So let me see if I can zoom out just a little bit more. Perfect. Okay, so this is what I want you to see. If you're starting out on this Tuesday right here, this is our start day right here. This is our start day, and we're looking back 1, 2, 3, 4, 5. We're looking back the last 5 days. What can you identify happened in the last 5 days of the market on this Tuesday right here? You're going to say, okay, well, the market pushed to the upside towards that midweek last Tuesday. The market pushed to the upside. And 2 days ago, what did the market do here? In the week, it stop hunted. Can you see that? This stop hunt right here. This is where the market pushed all the way to the upside and cleared out all these highs all the way over here. So these highs have now been cleared. So now market structure, what does that mean? What goes up has to come down the same way what goes down has to come up, right? It's just a game of going back and forth. It's a game of going back and forth, back and forth, back and forth. Market goes back and forth. It just does it over and over and over again. So that's why, like I said, we're more so day traders, and a lot of people are swing traders and, holding these trades for 2-3 weeks a month. Those trades that, those are swing trades. Those are more so investments. Okay. So I always, like I said, I want you to keep that 3 to 5 day look back in your mind so much, and that 5 to 10 day look back as well, and just engrave it in your mind. And looking at the 1 hour, 15 and 5 minute for market structure and looking for your trades, your entries, and your setups. It's the most important thing. We'll get more into the 15 and 5 minute time frames when we go into the time and price video, because that's where we look for our entries. But the 1 hour time frame is golden for you. The 1 hour time frame is going to identify market structure and identify where you're looking for buyers and sellers to a T, as good as it can get. So please, if you take anything, what I want you to take away from this video the most is that the 1 hour time frame is key for direction. 15 and 5 minute is key for entries. And you start your markups and you start your analysis on Sundays. You start your analysis on Sundays and you look back at the previous weeks to identify how the market has been moving. The previous 2 weeks will tell you whether you're looking for buys, who's in control of the market, buyers or sellers. And in the video, buyers versus sellers, will go into more examples of just showing how the market is releasing buying momentum and how the market is releasing sellers momentum, and how they just go back and forth. And you just have to be patient in looking for your trades. Okay. So like I said, as we get deeper into this course, identifying highs and lows, buyers versus sellers, everything will start to slowly go into, everything goes into flow. So please take notes and continue to watch the videos. And I appreciate you guys, and I'll see you on the next training.